G'day folks, welcome back to another update on defence stocks. Now I haven't done one of these for a number of months, but I'll just do another revision for you with the military industrial complex ramping up with further military things happening around the world, obviously around the Middle East, but also in around Ukraine. See things are going in terms of these companies. So we're going to cover NorthropGrumman, Lockheed Martin, General Dynamics and Raytheon. First, let's take a look at General Dynamics on New York Stock Exchange. GD is the ticker. On the monthly, we're still bullish, although notice the CCI is breaking towards this moving average range, and as soon as it enters that range, we'll call it neutral. The other thing, more importantly, we do have a bearish divergence. Now, I've had a couple back here. First, this one back here between these two highs, lower highs on the CCI versus higher highs on the price. Let me just blow this up. So that's the first divergence, and what we do is we would have measured the Fibonacci range between that low and that high, and I've marked it there with a rectangle. That's a 23-38% target range, and it pulled back and hit that range. This one went as low as the 50% level, settled around there, but actually the wick went as far as the 61%. So we look at that in terms of, had it broken below that, that would have been a more bearish sign. So these are very long-term bearish divergence. The other one we're looking at the moment is, it's hard to see on this CCI chart, but between that point there to that, so that high there is lower than that high. That's a bearish divergence versus higher highs on the price. And if I was to pull back another Fibonacci, now currently it's probably still in play. You can take it back to that level. I like taking it back to the recent significant low, or you can take it back even to that level there. You can see there, and I'll pull it back to that level. You can see there the target range is going to be between that 23 and a 38% level. So we'll see if it hits that area. That's assuming it pulls back now. Of course, if it could keep rising, so long as the price keeps rising and the CCI keeps dropping, we're going to consider that a bearish divergence. So again, I don't trade these in terms of selling, shorting it there, for example, but I do look at these divergences as a potential for getting out of the stock if you already own it. So I just carefully watch that on the monthly. Now that's a very long-term view on the monthly. On the weekly, we do have there's no divergence there, but again, if I zoom in, you can see that high is slightly higher than that high there. So you could argue that's almost a double top versus a lot higher highs on the price, but let's not consider that at this point. But we do have a lower highs on the CCI here versus higher highs on the price. And similar to the monthly, we've got another bearish divergence there. So similar to the monthly, and again, the monthly and the different time frames are all independent. I will take it back to that level. And the target area would be, and it may have already touched the target. You can see that wick just came short of that 23% level. So I'll keep that in there, see if it does fall back a lot further than that. But at the moment, the weekly is showing a bearish signal on the CCI. On the daily, you can see there it's already hit the target. We had a long-term bearish divergence here over a number of months versus higher highs on the price. It actually did a double top up there off that resistance at 301.20. Came down, just touched and bounced off our target area. Doesn't mean it's going to continue higher. I'd like to see this break a lot higher, both the CCI trending higher and also the price break above this resistance to be more bullish. So in summary, the monthly, weekly, daily on General Dynamics is potentially showing a bit of a downturn at the moment. Now, if you go to the 1 hour chart, again, we only use, we trade on a higher time frame. So if you're trading on the 1 hour time frame, for example, this is a lot more volatile on the 1 hour, but you can see there we've also got similar sort of patterns. Now, in this case, the CCI is trending in line with the price. You can see those highs and lows are pretty consistent with the price movement, so no divergence there, so nothing really to report there on the hourly chart. It's more the monthly, weekly, daily chart you should be focusing on in this case. Now Lockheed Martin, LMT, this is a ticker, that too has got a bearish divergence on the CCI versus the price, and that looks like it may be reaching some limit, but again, we're getting new highs actually on Lockheed, so don't short it just yet if you're planning on shorting it. I'd like to see this break down and maybe break below into these moving average ranges to close it out and take your profits before taking further profits or taking further trades to the upside if you're trading long. But that's a very long-term play on the monthly. On the weekly, Again, you've got a lower highs on the CCI versus higher highs on the price. Again, a bit too early to draw any conclusions in terms of a pullback yet. It could keep going higher. And on the daily, what I've done here is I've drawn some key support resistance lines. And this was our key support at 385.60 previously. And previously we had this 494.20 resistance, and it's actually broken quite strongly through that resistance to make pretty aggressive bullish movement to the upside. But notice what we've got here, and some of these very short-term divergence are very powerful movements. We've got a bearish divergence on the CCI versus the price, and we may see it pull back. Now again, if I was to draw a minimum retrace level, I'll take it back to that level there before, and to that, as assuming it starts retracing from there, it could go a lot higher, of course, so wait for it to start pulling back. But the minimum retrace level would be that 23.38% level. So again, keep an eye on that. And if we jump to the 1 hour chart, again using the daily as a reference, it's already broken into that. So it's starting to weaken on the daily, and we only take short trades. But notice on the hourly, we do have a significant divergence showing as well versus higher highs on the price. And again, if I was to draw a target area, bring it back to, yeah, this low here is probably sufficient. And we take it to that high, to the highest point, and a minimum retrace level. And I stress minimum, it could go a lot further. That's a minimum retrace level if it does pull back from there. Next, looking at NorthropGrumman on the monthly, we do have a bearish divergence similar to the other stocks. On the weekly, and again looking at those highs and lows between that high and that low, it's a lower high, so that's not sufficient for a divergence. So no divergence on the weekly, but a bearish divergence on the monthly. And on the daily, we've got a slightly lower high on the CCI versus higher highs on the price. That's still a bearish divergence, so keep an eye on that one. And if that was to break down, minimum retrace would be that 23.38% target area. That's assuming it pulls back from there. It could go a lot higher, of course, in which case we have to redraw these Fibonacci's. And going to the 1 hour chart, again, we had a bearish divergence there between those points on the CCI versus higher highs on the price. So again, we're looking at a pullback, and if I was to draw a Fibonacci retrace on this one, we take it back to that low. It's not much difference in the difference. So you can see it's a minimum retrace on the 1 hour time frame for NorthropGrumman. Lastly, looking at Raytheon RTX Corp, which is a UTX ticker on the New York Stock Exchange. The CCI is moving in line with the price. No lower highs versus the price, so nothing really significant to show there for a divergence. On the weekly, likewise, the CCI is moving in line with the price, but both the monthly and the weekly have very bullish movement showing up. And on the daily, again, I've drawn these two key support and resistance areas. You can see the support, it's hitting at 118.20, giving us a double top there. Hasn't quite pulled back yet, but notice we've got a bearish divergence on the CCI. It's probably a slight, almost a double top on the CCI. That's still, I consider that a bearish divergence with higher highs on the price. And if I was to draw a target area, take it back to the significant low. So probably back to this level here, I guess, would be the appropriate place to put it. And the target area then would be in that area there, the 23.38% area, which also coincides with this support line at 99.15. So we may actually see it pull back to this area. In fact, rest off that support line. So I'll keep an eye on that and see how that goes. But also going to the 1 hour chart, and we see here we've got another bearish divergence, very strong pullback versus almost a triple top there on the price chart. So that's a bearish divergence as well. And if we were to draw a target area for that, take it to that high, and that would be probably the area we can expect it to pull back to. Now, it may already action that, but I would say it's going to probably come back further. The CCI is still falling, so that's probably our minimum area to look out for. So hopefully you got value out of the video. If you own these stocks, maybe look at an opportunity to get out if you see it pull back towards some of these moving averages. Support us more on the Patreon page, or you look at bullish shares every week. to get opportunities to go long. And thanks for support, and we'll see you in a future video.